They may not be recommending gold, but they are recommending silver. And one of the reasons, gold is money, silver is money and a commodity. It's both, and it's a big time commodity. It's the second most useful commodity known to man behind oil. Hi, this is Mike Maloney. I've got Jeff Clark with me once again, and we've got a lot to talk about today. How are you doing, Jeff?
I'm doing great, Mike. Great to be with you again today. And yes, we do have a lot we want to try and cover today. So to help us out, we brought Adam Tagger back with us this week, the co-founder of Peak Prosperity. So Adam, thanks for jumping on a call with us.
Hey, my pleasure. Thanks for having me back on. I had a lot of fun last week with you too.
Yeah, so we're going to start with a little bit of fun here because we're going to point out that you got honked 4 times last week when you referred to currency as money. So we're just passing the baton. I got honked a lot, Adam, when I first started with Mike. It's easy to do, but we're going to refer to currency not as money, but just as currency, and gold and silver as money going forward, right?
Got it. Yeah, it's funny. I think that term fun is all relative in the eyes of the beholder. But yes, I'm very chagrined, and hopefully we'll have a lower honk count this week.
You're right. Very good. Well, this first article, guys, is from Zero Hedge, and it's highlighting that Goldman Sachs is saying that they're going to double down on the commodity supercycle, that they're going to double down on their bet, buy more commodities because they think inflation is coming. And they claim in this article that commodities are actually the best inflation hedge and not necessarily gold and silver. In fact, they're reducing their exposure to gold based on this. So, Mike, you first. What do you think about Goldman Sachs and this article on commodities versus gold?
Well, I think it's great that they're finally on the bandwagon here and figuring out what happens when the entire world is creating currency at a pace that has to drive asset prices up. Every dollar has to go somewhere. And the dollars that have been created mostly went into the stock markets for a number of years. Now it is leaking out. And in the article, they talk about, China's credit creation affecting the world. And they've got Australian real estate in there and a whole bunch of different factors with a delay time. And so they are expecting some big inflation in the future. I've never, in all of the monetary history that I've looked at, I've never seen an instance where the entire population is on one side of the boat, such as in debt, borrowing currency into existence, and then you go right into inflation and wipe out the debt of it's rewarding mass stupidity, basically, when you go right to the edge of debt where you couldn't take a deflation. Using leverage, there's nothing wrong with that. So a certain amount of debt can be good. But for most of the population, they live off of debt. They live far beyond their means. And in all of the episodes I've seen in history, usually there has to be some event that sort of clears that out first and then allows the big boys to win. The banks end up on the winning side. And that would require some deflation first. And deflation here that I'm talking about is a contraction of the currency supply. And it doesn't necessarily mean base currency. I'm talking about the currency that the banks create when people borrow it into existence. Because when you sign a credit card, when you borrow on a house or borrow for a car, you're creating currency for the bank, and then the bank has the gall to charge you interest for it. But the one thing in that article, they may not be recommending gold, but they are recommending silver. And one of the reasons, gold is money, silver is money and a commodity. It's both, and it's a big time commodity. It's the second most useful commodity known to man behind oil. It's got more uses than anything else except oil. So anyway, Adam, what do you think about the article? You're actually the one that brought it to our attention.
Yeah, well, you just stole my main point, which was Goldman Sachs is actually recommending people go long silver, and that they have it's a sizable long silver position in their general commodity index that they're sharing, which I think is a tidal shift for long suffering precious metals holders, where so many of the big commercials have been short the precious metals, but particularly silver. So now that Goldman is going long. And let's also note, too, that the report, or the article we're talking about, the Goldman report comes on top of a similar JP Morgan report, making essentially the same premise. So, it's very interesting to see these big commercials now being pro commodities going forward. And I think that is a seismic shift that is we should all take notice of. Mike, you said something else about how, what's happening here is we've taken on so much debt. And now we're basically sacrificing the currency to try to, get out of the burden of all that debt. And I just want to underscore that is not an accident of nature. That is the playbook. I'm sure you're familiar from your study of monetary history, Mike, with the term financial repression. And that's essentially what the financial repression playbook is you take on debt until you begin to feel the burden of the debt service. And then you just try to bring that down by devaluing the currency and placing the burden of servicing and paying off the debt or dealing with the debt on the populace via inflation of their currency and depreciation of their currency, versus actually having to deal with the real consequences of servicing, your reckless debt buildup. So the only other thing I want to mention on this, I think is notable, is Goldman talks about this as demand pull inflation. And this is something that we see from echoed by a number of, at least the experts that I've been interviewing on my programs recently, where they do see an awful lot of new infrastructure spending coming forward, with a lot of these stimulus programs, particularly on the fiscal stimulus side, where, governments like the US and Congress, is going to be spending multiple trillions on both repairing our badly neglected infrastructure, but also, sort of under this New Deal, trying to rebuild more green-oriented infrastructure. So that is going to be demanding a ton from the physical commodity space. And, I think that's going to be just a big factor going forward. Those investments need to be made one way or the other, whether you agree with the logic behind them or not. And so I think we are going to see commodities, including precious metals, particularly silver, having a really strong tailwind going forward, which again, very different from the past 10 years.
Yes, very good.
I agree, but I still think that there's going to be some sort of financial crisis that'll cause banks to get scared. And when they stop rolling over short-term rolling debt, that creates a contraction of the currency supply. The government can be expanding base currency hugely, and they can be doing all of this deficit spending during that period of time. But there's a time lag before that starts causing real inflation. Maybe I'm wrong. Maybe we just go straight into inflation here. I don't know.
Well, that's the I would say $1 trillion question, but multi-trillion dollar questions at this point, right? And I don't disagree with you, Mike. And I hate to say that. I mean, we almost kind of hope for this deflationary wave because it's going to take some of the crazy excess out of the system and give us a chance to maybe do things a little bit differently going forward. But I don't know. It's kind of a crapshoot right now.
Yeah. Jeff?
Very good. Okay, on to tweet of the day. And this is from Daniel Larimer. And he says here, my new book is available in print and ebook formats, More Equal Animals. And Mike, you actually know Dan, and you actually wrote the foreword to this book. So tell us a little bit about this.
Well, it's a brilliant book. Dan Larimer is really a super smart guy, and he has built his life around making sure that we reach consensus. And he's got a mission of securing life, liberty, and property, and freedom for everybody. And one of the things he came up with is just brilliant, and it's the first half of the book, roughly. And that's we have a 70% dissatisfaction with government. Currently, the government approval rating is below 30%, and it's almost always below 30%. Sometimes it goes very low. And so we're not getting what we've got a system currently that elects these megalomaniacs, these people that they aren't necessarily qualified to run things, but they're the people that shove themselves to the front and say, elect me and I'll tell you how to live. They're just good at selling themselves to get elected, vote for me. And his idea is just absolutely brilliant. If you are randomly assigned to a group of, say, 10 people in your area, and you have a couple of meetings over a period of a month or whatever, get together 4 times, you all discuss things, and then you pick a representative from your group to sort of go up to the next level. And everybody gets the opportunity to run, whether it's for president or for mayor or whatever. The greater the voting population, the more levels that you have to go up. But basically what you're doing is you're taking 100 million people that are potential voters, and you're eliminating 90% of them. So now you're at 10 million people having meetings the next month to try and figure out who the best people are, what the best ideas are, the people that are the most organized, the people that are basically like the best chess players. And they pick and now you're down to 1 million people, and then 100,000 people, and 10,000 people, and 1,000 people. And by the time you get to the next level of just 100 people, you could just randomly pick any one of those. What this does is you can't, big money, currency, big currency.
Uh-oh.
Revenge is so sweet.
The big currency from all the corporate interests and I mean, who is the media going to follow when it's at 1,000 people? The media can't pick a winner. The big currency, the corporate interests, the lobby groups, none of them can pick a winner. You could randomly pick when it gets to 1,000, but the minute that each one of these 1,000 pick one to go to that next level, or you could wait until it gets to 10. You could make once you get to the 100 level, you could have everybody just go in a room and not come out until they've picked 10 people. And then a random person is selected out of the best 10, the most qualified 10 people in the entire country. And now you would have, since it was selected by the people with no input from special interests, from big tech, from big media, everything else, you get a government that would have, and each level, it's a group of 10 meeting, and 7 of 10 or greater have to pick a person. And if they can't come to that consensus of 7 out of 10, they don't have anybody that goes to the next level. And therefore, you're going to end up with roughly a 70% approval rating of government. You're going to get a fair, honest government that actually does something for us. So this is a way of fixing most of the ills of society by addressing the root cause of 90% of the problems that we've got. So it's a brilliant book. Everybody should get it and read it. It's not a really easy read, but it is absolutely brilliant.
Very good. Adam, do you have a reaction to this kind of system? It's very interesting.
Yeah, no, I love it. I love the idea. And I think it's probably going to put it it makes so much sense. It'll probably never be allowed to see the light of day, given how corrupt and captured our system already is by the moneyed and special interests. But I certainly hope I'm wrong. And Mike, you had suggested that I bring Dan on my interview program. And I'm, now that I know more about his proposal there, I'm definitely going to reach out to him.
Well, he's the creator of Steemit, BitShares, and EOS. So he's really built his life around reaching consensus and recording it permanently, so that everybody can see that this is what we decided. But the thing about this is it can be run in a parallel party. It's sort of like Bitcoin. Now that it's out there and being run on processors all over the world, it can't really be smashed or suppressed very easily by governments. So there really isn't any way that they can not allow it, because you can still be a Democrat or a Republican or a libertarian or whatever you want, but you can also join this party and vote this way. And once, even if it's just to elect a mayor, once the example is set, like in a small community or something, and in a small community, it wouldn't take any more than a month or 2 months to be able to elect a mayor or a city council, stuff like that. And once the example is set and people have done it and they see the results, I think it would spread like wildfire. So
yeah,
anyway.
very good. The book is available now, and it's only, if you click on the link there, it's only $4.99 in ebook form. So if you're interested in reading it, you can do so very inexpensively. And again, Mike wrote the foreword to this book. So, okay, well, on to chart of the day. And this is from Wall Street Silver. And basically, he's including a chart in his tweet from our friend Nick Laird at Gold Charts R Us. And basically what Nick did in this chart was he showed what the price of silver would be if you excluded COMEX trading and you only bought after close and you held until the COMEX opened the next day. This is what the price action would be. And you can see that going all the way back to 1970. But notice when it really took off was in 2018. Since then, you can see how the silver price would be into triple digits if it just traded, if we excluded the COMEX trading. So it's very interesting. So this has been out for a while. This has been shown before. But what's interesting now is that just how much silver has risen, in the past couple years because of all the things that have happened. So, Mike, what's your reaction to this chart?
My reaction is it's absolutely amazing. I've seen this before, but I haven't seen it going all the way back to 1970. So this is very interesting. And what strikes me is how different this looks than a chart of just the silver price that includes the COMEX trading during the day when this is the absolute proof. This chart is the proof that there is manipulation going on. When the commodities exchange isn't open, it has to make up for the difference between this chart and the real price. And so most of the action on the COMEX over this time period is suppressing the price. It's interesting that when you eliminate the commodities exchange trading in the United States from the equation, that you end up with a silver price today of $230 an ounce. That's huge. What do you think, Adam?
I totally agree. I think the only compliment I want to add to this is we do see a similar effect in the overall stock market, where over the past 10 years, the vast majority of the gains, and there have been great gains, have been coming in the overnight markets. But I think it's still for the same underlying reason, which is it's a lot easier to manipulate prices in these smaller, thinner overnight markets. And so I think, it's just another way in which the manipulators are engineering the outcomes they want. And that just means higher stock prices for us, but it means lower silver prices.
Well, we're going to close this video out here, Mike, with the meme of the day. We'll have you read this to us. But if you've not read Mike's book, the link is below, and you can do so for free. It's there available for anyone to read. So click on that link if you've not read Mike's book. So, Mike, take it away with the meme of the day.
Okay, I'm going to read this one from bottom to top. You've got regular taxpayers, and then you've got government employees that pay tax. Because it's a very frictional system. You take taxes away from everybody, and then you pay government employees that then have to pay taxes, and it has to go through the government, and the people in the government have to get paid. The IRS and the Treasury and everybody that's going to handle that currency before it gets paid to them again.
Yeah, right.
So the taxes they pay come back to partially pay themselves again later, but a whole bunch of people have to take it along the way. And then there's another one that I want to close with here, and it's just a picture. And like our producer, director, Dan Rubach, said, it's just like this extension cord, this outlet strip being plugged into itself. But on the cord, you need to insert a big resistor because there's energy loss that happens every time it makes that loop. So that's it.
Okay, great. Thank you, Mike. And Adam, thanks for joining us again this week. I'll see you both next week.